Good morning and happy Friday, everyone. Thank you guys so much for joining today's stream. The market is mixed this morning. We have some nice movement out of Bitcoin too, so it's always good to see. But I'll say overall the market is pretty mixed. Like I would say maybe 30 minutes ago, the market was not looking good at all. But we are seeing a pretty awesome recovery out of the SPY so far. Tom, I mentioned earlier in Discord that we are bouncing off of a pretty key support level right around that $426 level. So that's good to see. And then we have a lot of resistance overhead though.
Yeah, I'm really glad to see this bounce off of 426. Like, if we would have fallen below this, I would have been pretty worried about the SPY today. And I honestly would have thought we could have maybe came back down and retested 420 if we would have broke that. But I'm really glad it ended up holding up, and the market is coming right back, like you mentioned. As far as resistance overhead, as we start to rise here, it looks like there was a lot of resistance yesterday in pre-market and yesterday in after hours, right around 434. Maybe if we break out above that, we can come back up and maybe retest like 436, maybe 440 up here. But it's going to be a tough day. Like you said, lots of resistance overhead. And personally, I don't really expect the market to just fly up or anything, especially after some of the negative movement we've been seeing over the past few days.
I hope it does, though. I mean, the best we can do is hope that the market holds up. Hopefully we have a good Friday. I will say, like, Apple is looking pretty strong this morning after their pretty great earnings report. Of course, it's nothing like jaw-dropping or anything like that, but still, Apple's a big player in the market, and it looks like that run-up that we're seeing is definitely having an effect on other stocks overall. The market just opened up, so Apple's up 4.5% today, which is good, but remember, it's an earnings release, so it's nothing crazy.
Yeah, it's nothing too big actually for Apple's earnings. Like, I would have expected them to maybe go up a little bit more, but as we see though, it is kind of flying up right now, market open. So maybe it'll come back up and break up above 168. I was a little bit sad to see it come back down in pre-market, Mike. I was hoping to see it really fly up, but the SPY might have been playing a big role in the way Apple was moving this morning. And Mike, another one that I'm really hoping is going to go up today is Tesla. They were down like 12% yesterday. They actually went even lower here in pre-market. So I'm glad to see them getting some green here at open as well.
Love to see it. So the market's looking good so far, but we know how this can last in this crazy market. Like, we can see some bullish movement for like 10 minutes, and then, a couple minutes later, we're crashing down. So we all know this volatility is insane in this crazy, crazy market. It looks like Visa is looking great, Tom. It looks like they reported earnings, and what are they doing? Breaking right above that like 220 resistance?
Yeah, they're actually breaking out in a pretty good way here. It looks like they are getting some red candles here on the 5-minute, but I will say it's a very nice move off of yesterday, and I'm really happy to see these credit card companies do a little bit better today. I know that they've been beaten down, especially Visa. Even this week had some pretty bad moves, so I'm glad to see that they ended up having a nice gap to the upside here. And I really hope that with the breakout up above 220, they can continue, Mike. But as we're seeing here, there's just so much volatility coming in, especially like on the 1-minute candles. But as far as other stocks moving besides like Apple and Visa, I actually have a pretty good hype stock. Charge Point is up here, and even BLNK is starting to run today.
Good stuff. All right, love to see that. And I know we talked a lot about Robinhood yesterday, so let's take a look at this one just to check in. Wow, Robinhood's down like 12% right now. Lots of volume is flowing in right at open though, so that's interesting. It looks like it's trying to bounce off that $10 support. It's bouncing up right now. $10 is a pretty big level. It lingered right around it basically ever since they reported earnings, so that is an important level. But still, Tom, they're still trading at a pretty hefty valuation, you can say. And then another thing too is their outlook isn't the best, and that's a problem considering they are a growth company. But another part is like, Robinhood over the past couple of months went from 85 down to 10. It's like, you're like, just like in the back of my head, I'm like, when are we going to see a bounce? Like, I'm not in Robinhood, but I've been eyeing it up. I've been eyeing it for a potential play.
Yeah, and who knows, maybe the bounce will come pretty soon. It looks like we're actually recovering up quite a bit here at market open. Ever since you mentioned it, Mike, the stock has actually flown up here over the past like 60 seconds. It's kind of crazy to see how high Robinhood's getting here. We're almost back up towards $11. And to be honest, if we get back up to $11.50, it'll almost be like earnings never happened. So that would be like best case scenario, I think, for Robinhood actually. And you're right, those outlooks are not good for them. I really hope that they can start to turn around soon. And who knows, maybe $10 will be a big support for them. I mean, obviously it's playing out as one, but I really hope that over the next couple of days, $10 ends up holding up, especially if we see the overall market continue to fall down. I really hope that Robinhood can start to form a good support somewhere.
For sure. Wait, is that the market turning over, Tom? What's going on?
Yeah, the SPY is turning back over here. You know, we had such a good pre-market move. I thought maybe we get some good upwards momentum, but as soon as the market opened, you know, the SPY turned right back over. We're not down too much, but you know, if we fall back below 430, we might be coming back down towards 427 or 426. So definitely keep your eyes on the SPY. Like we've been seeing, Mike, lots of mornings, the SPY is up in pre-market and then tanks off in the middle of the day. So maybe we'll see that happen again here.
All righty. All right, so we have Alex saying, may we survive another day of trading this market. And then Johnny said, levels for NVIDIA down big time. Wondering if I should buy puts or is it too late? So I'm not sure what you're holding. Are you holding shares or calls or something like that? Like it really depends for us to answer that question. But looking at NVIDIA, yeah, I mean, it is down significantly from its highs. Again, we don't know what you have and what price you have that asset at. So, for example, like if you're holding shares at 330 or if you're holding shares at 260, the hedges will be completely different. But I will say it is a little late for puts considering that the stock is down quite a bit from its highs. And then more importantly, the IV is almost double the level it was a couple months ago. So at this point, what you can do is like call credit spread. Okay, so he has shares, so like he can do like call credit spreads or maybe like a put debit spread. Those are like two possibilities, but again, we don't know what levels you're holding at. So I don't know, Tom, do you have any input for this?
You know, I kind of feel like AMD and NVIDIA will both go lower here maybe over the short term. We just have to keep in mind that they're at some pretty big support levels. Like right now, NVIDIA has been bouncing off of this support right around $215. This week, we've touched this level like 3 other times and bounced up off of that. If we break below 215, I think it might be good for puts intraday. But since you're holding shares, like Mike said, with the way that NVIDIA has been falling, I'm not sure I would like hold puts for too long. Maybe for like a quick intraday move below this support, it might be pretty good, but I don't think I would hold puts for that much longer anymore. Honestly, I'm kind of eyeing up some longer term plays on these stocks now. Like Mike, I know that me and you we were calling NVIDIA to go down whenever it was up around like $300, and it actually ended up playing out pretty well for us. And looking at NVIDIA down here, we're getting pretty close to a huge support around $200 even. That's going to be big for them. And then AMD is approaching $100, which should be pretty huge for them too. So they are approaching some major supports. If they break them, I think they can continue down. But at this point, I'm kind of with you, Mike. It's almost just not worth the risk right now.
Yeah, so again, it depends on what level he's holding at. He said shares, but like even looking at NVIDIA, like let's say I just took a random guess and said he was holding at 290. It's like what are you going to do at this point? Like buy like the March 18th 200 strike puts for, what is that, like $1,400? You know what I mean? Like I feel like it's too late at this point, but what you can do, like I said, is call credit spreads or put debit spreads. So he has shares at 320. So yeah, I mean, call credit spreads or put debit spreads would probably be ideal. Another thing you can do, never mind. I would just stick with either call credit spreads or put debit spreads. So good question there, and hopefully NVIDIA pops up for you. But yeah, Tom, so far today the market is very mixed. I will say we are still seeing quite a bit of selling pressure. Do you have like any good setups or any setups you're eyeing up for potential plays?
Man, there's actually quite a bit right now. And unfortunately, like last night, we had some pretty good momentum plays in the YouTube video. Like NIO actually broke below that low of yesterday, ended up tanking down quite a bit. NIO is down to $20 today, Mike. Like this is starting to get crazy. If NIO falls below 20, I could see them selling off in a pretty big way today, and they're already down quite a bit. Same thing we're seeing with Lucid Motors. They just continue to fall below their lows here of the previous day. Like yesterday, they had a pretty big support down here around 28 to $28.30. They really broke that this morning. Now they're at 26.50. Definitely not looking good. One stock I was also eyeing up, Mike, was Boeing, and Boeing fell back below their $200 support yesterday. It's definitely not looking good. They're also continuing the sell-off. Like you mentioned, it's definitely another red day in the market, unfortunately, and lots of stocks are down. There is a few stocks in the green, like Tilray, MasterCard, Apple, Visa, but overall, most stocks are down again, unfortunately.
Yep. Alrighty, so good stuff there, and I just want to welcome everyone to the stream. So thank you guys so much for joining. Welcome Alex number 1, and then the other Alex. Welcome Hunter, Jerry, Vicky, Bill, George, Johnny, and Shelly. Thank you guys so much for joining. You guys know the drill. Let us know what stocks are on your radar. We can definitely take a look at them. But Tom, doing a quick scan of the market overall. Looking at some of the biggest movers today, I will say MU is just sliding down. It's one of those chip stocks. It's down 2.5%. Again, it's been beaten down quite a bit from its highs. So it's like you would think we would see a bounce soon, but then again, it's just bleeding off. It's making it new low of days as we speak.
Yeah, and actually, MU almost had a pretty big double top here on the daily chart, like right around that $100 resistance. Personally, this one, I could see this one going down a lot more, actually. I'm not going to say a ton, but, I could maybe see us come down and retest $70 or so over the next few days. This actually is a pretty good example of like a dead cat bounce setup, Mike. Like, you can see how they had like 2 or 3 days of consolidation. Now they're getting those 2 huge sell-offs that are going to finally break below that low there. So definitely looks like a bearish play in my opinion, especially if we fall below the $75 support. I'm seeing a pretty big support at 75, and I like MU. I'm pretty biased towards a lot of these chip stocks, and I love them for the long term. And I was one of the people saying to buy MU whenever it was at $65 and $70 the last time. But yeah, I definitely could see it going lower here in the shorter term, especially if we see the other chip stocks like AMD fall below 100. If AMD falls below 100, I think it might cause a lot of selling pressure in these chips. Like $100 is such a key level, and AMD affects all these other companies too, as well as Nvidia.
True. And then the Pelosi's are in MU, Tom, so that's interesting. Like, I know the timing was a little rough, but then again, no one can time the market perfectly, especially in this wild market, but it's just something to keep in mind. Like, MU, with it falling so much, it might be a potential like buy the dip opportunity for the long term. I'm gonna have to look more into their fundamentals, but they're in an industry that is growing so much, and when they just fell like 20% from their high, like that's pretty big. So I'll take a look at them later, but as of today, it's down quite a bit and it is selling off. So definitely keep that one on your radar. Also welcome Mike, Keisha, Ravi, Square, and Trading to the stream. Thank you guys so much for joining. Tom, another one that's moving in a really big way is Lucid. So Lucid is down nearly 10%. It is getting destroyed. Volume's coming in a pretty big way. IV's popping. 9%, Tom.
Yeah, this is one of those ones I mentioned a few minutes ago. It fell below $28. It's not looking good today at all. We're down to 26. The last time I mentioned it, we were at like 26.50. So it's continuing to sell off in a pretty major way. And yeah, like you said, down 9%. I wonder what we're going to get to today. I know yesterday was pretty rough for Lucid. I think they were down like something like 12 or 14%. So I really hope it starts to slow down for them eventually, Mike. Like, I think Lucid's a pretty good company, but ever since they fell below that 100 SMA and they broke that key support around $34, it just has not been looking good for them. And, like what traders need to realize is that this doesn't mean the company's terrible either. Like, it doesn't mean they're going to go bankrupt, but I think it's honestly creating some good opportunities for the long term. Kind of like what you mentioned with MU. As these stocks start to fall, it's gonna make some good opportunities. Like Lucid, for example, has a huge support down here around $20, and they have another one around $25. So I'll definitely be eyeing up both of those supports over the next couple days.
Gotcha. Another thing too, Tom, is I forgot where I was reading it, but when the .com bubble, I guess you can say, exploded, Amazon stock, I believe, went from $113 down to $6. Right? I'm not trying to compare Lucid to Amazon by any means, but the point is that when you are trading companies in their early stages of, like their early growth stages, there's going to be a ton of volatility no matter what, right? Like it's just going to be a volatile, wild ride. And whether you're looking at Lucid or Draftkings or whatever stock that you think has a lot of growth potential, sometimes the company can do great and the stock just still falls. And sometimes the company will do not so great and the stock can rise. So that's just one thing to keep in mind.
Yeah, and look at even Apple on a split adjusted basis. I'm not saying it was during the .com bubble, but you can see how they even fell a lot. I mean, it's a split adjusted level, keep in mind, but they were at like $1 and let's just say 30 cents. They fell all the way down to like 25 cents here, like on a split adjusted basis, but still that's a pretty big drop out of a powerhouse like Apple. And you mentioned it with Amazon too. I mean, you're definitely hitting that on the head, Mike. That's a really good comparison to some of these growth stocks nowadays. And I really think that, as we looked at some of these stocks like DraftKings, obviously they were in those growth phases, kind of like what we saw with those other companies, and they just got beaten down a little bit. Obviously, it's happened before, like you mentioned, with Amazon, Apple. It's happened to Tesla before. Just about everything that's growing has that happen. Even like AMD had that happen a lot in their beginning stages over the first few years. So it's pretty crazy. And I'm wondering how low some of these will end up going. AMD is like retesting $100 here. And, they've been one of those growth stocks that have really picked up over the past few years. Like if we look at AMD on the Max Daily, they've been going up so much. Like I'm a little worried that something like them might end up looking like an Amazon or an Apple from the early 2000s. And, we kind of talked about this in private a little bit, but, a lot of people, they talk about that .com bubble. And I think that nowadays we're almost in our own bubble. I don't know if you want to call it an EV bubble or a chip bubble or what you want to call it, but either way, it's pretty crazy. And you might even be able to call it like an AI bubble at this point with how much AI's been integrated.
Yeah, or like semiconductors or anything like that. And like the tough thing about bubbles is that, like, let's say the tech bubble, right? Technology has been amazing for the world and the markets, right? So it's like a lot of the companies that are included in that bubble, like they are good companies, but the problem is that, like, let's say like kind of like what we had in 2020 and even like 2021, like when you have a company that has nothing to do with technology, but they just put .com at the end of their name, that's when, and then they also have a crazy valuation, that's where problems come in. It's the same thing with electric vehicles that we saw in 2020 and 2021. Any company can just say, hey, we're going to be working on electric vehicles or charging or batteries or anything like that, and the next thing you know, their stock price is up 5 times, and then that's where the problem is. And then even Hunter just said, thing about bubbles is that everything is amazing until it's not. So exactly. So it's like, it's tough because in bubbles, like a lot of companies will end up not making it, but the few that do will be game changers.
Yeah, definitely. And I've really looked at these bubbles a lot, especially the early 2000s, like the .com bubble. I've honestly researched that one quite a bit. And, looking at these valuations nowadays, like I've seen tons of comparisons, like comparison charts that show, company valuations the few years leading into the .com bubble. You can see like percentage wise, like how much some of those companies have grown and compare it to how much some of these companies have grown now, like AMD, Nvidia, not just them, but even other companies. And it's just even Tesla's counted in there. So it's pretty crazy to see how much some of these companies now are comparing to some of those other situations. Now, I know the times have changed, so it might not be exactly the same, but I could definitely see something happening over the next maybe 6 months or so, especially if we start to see the market sell off. Like if we see the overall market sell off, like we say, Mike, like whenever it rains, it pours. And if we start to see sellers come in, I mean, it can get brutal. Like, could you imagine? I mean, I know that we weren't really trading in the early 2000s, but could you imagine like seriously seeing a situation where like Amazon fell from like 100 something dollars down to just a few dollars a share. Like that would be absolutely insane to witness. And we might witness it here with some of these new stocks, unfortunately.
Yeah, like obviously Amazon isn't going to do that, but the point, like Tom
Yeah.
said, is like some of the stocks that are, in whatever industry, we might have crazy movement like that. So crazy stuff, Tom. But I will say, I'm looking at the market right now. Most of my watch list is now red, except for everything's red except for Apple at this point. So it looks like we're seeing continued selling pressure. Nvidia is breaking lower. Microsoft is breaking lower. AMD, NIO, Lucid, like we're definitely seeing the sell-off continue, at least for now. With this crazy market, I wouldn't be surprised in an hour if we were back up.
Yeah, me either. I'll be honest. It's been so up and down this week. Like if we look at a 5-day, 5-minute chart, honestly, the SPY's been kind of trading between this range of like 427 and then the high of like 440 to 444. So it's pretty crazy to see how much it almost looks like a heartbeat monitor actually this week. It's been really flat. And I was expecting the market to move a little bit more than this, Mike, especially with Powell speaking and with all these big events. But I guess that they've been kind of canceling each other out in ways. And, we did have some of these earnings also making impacts. Like, I know Microsoft reported, we had Netflix report last week, and this week's been crazy with Apple and Tesla. And Tesla did not help the market yesterday at all whenever they went down. And talking about Tesla, look at them. They're actually below $800 here, where they were just a couple seconds ago. Like, man, this sell-off is getting brutal, Mike. And, as we were talking about the bubble, I actually went ahead and looked at a stock, Unity. And as I'm looking at some of these stocks, Mike, like honestly, the bubble looks like it's burst on a few of these. Like Unity had so much hype. It ran up to 210. We're down over 50% now at $90. Draftkings is all the way down at $19 from highs of $60 just a few weeks ago. Maybe the bubble already burst, Mike. Like honestly, you know how history writes itself in real time. Maybe in a few months we'll be talking about how it was like a growth bubble.
Yeah, true, true. Crazy stuff, Tom. This week has been wild. Like, it has literally been one of the wildest weeks in a long time. Like, we had Powell, big earnings, GDP numbers, I already said big earnings, but like Tesla's movement, the Bitcoin news, Tesla's robot news, like, and even more news at this point. Like, it's just in the back of my head. So, just crazy.
It is. It's a really crazy week. And like you said, it's one of the craziest weeks we've had in a long time. And I would almost say this is one of the craziest weeks we've had since COVID happened. And, I know there's been lots of events, but as far as just like memorizing them all, I would definitely say this one's up there. And lots of stocks were down, unfortunately. I know lots of people were probably looking for some of these earnings to help out companies like Tesla, and it just didn't happen. Their earnings actually weren't too bad. It's just that they had that bad outlook, and they did say that like the chip shortage might start affecting them a little bit more and stuff like that. So just not good in the short term. And I hate to see them down below or down around 800 like this, Mike. It's getting so low, but I will say it's creating some good long-term opportunities. But yeah, I mean, the way Tesla's moving on the daily chart is just, it's terrible. They're falling below some trend lines. They're starting to really tank off. And, I know lots of people were worried about Tesla, Mike, whenever they fell from, 900 down to 600 last time. And now that we broke some of these trends, I mean, I'm going to be pretty worried here.
Yep. Alrighty. So we have Ironical saying, Tom, you own Intel. Do you think it will go more downside? So, Tom, what are you thinking?
Well, it's actually not even loading here. There we go. Yeah. Now it came up, but yeah, personally, I think it might actually go back to the downside a little bit more. And I was actually talking to Mike about this exact situation just a couple days ago. And, looking at Intel here, it was holding a very key support around $48 ever since it had this initial drop a few months ago. And looking at it, we just fell below that key support. Honestly, we need this support down here around $43.50 to $45 to hold up. If we end up falling below that, Intel might take a bit of a tumble. They have been sitting here for a long time around these levels. It might go down in the short term. So keep that in mind. Intel will definitely be a longer term play, in my opinion. I'm holding mine for the long term. They do pay dividends, which is good. But at the same time, there's like I even said in the past, there's probably better companies to pick up down here, especially whenever we see AMD down around $100, it's pretty hard not to grab them. So looking at all the companies, I like Intel. It's just that in the short term, they're definitely getting hit hard. And those earnings did not go the way I think people wanted them to go for Intel, of course.
Yeah. Alrighty, and then we have Mike saying, "Ouch! Look at Matterport, MTTR." Yeah, this one's been brutal, unfortunately. I mean, they have so much potential, but over the past month or 2 months, like anything with growth, it's just been getting smacked. And yeah, Matterport's down another 7% today. IV is sky high. If you're not in this play yet, it's like the perfect opportunity for a short put, considering it's a relatively low price stock and IV's at 150%. So that's
Yeah,
insane.
this one's crazy. I cannot believe that it's this low. I remember it, Mike, it had so much hype just a few months ago at like 25 and $30. Like honestly, like do you remember all those metaverse articles coming out about Matterport at that time? I'm sure so many investors loaded up on this one. I bet a lot of people are pretty angry.
It still has potential for the long term, but again, it's in a volatile industry, we could say, and it's a volatile stock. It's at like a big point in its growth. I guess you can say development, if we want to say that. It's a relatively new company to the market, and in the same way that Amazon fell from 113 down to 6 or whatever the number was, there's going to be a lot of volatility for a company like Matterport. Will Matterport be like Amazon? Probably not. But the point is that there's a lot of volatility. So it's been wild lately. We also still have that like metaverse potential with Matterport. And their earnings are coming up in like a couple weeks, so that should give more clarity. But Tom, another thing I was looking at with like all of these growth plays is earnings are coming up soon. So it's like if these companies come in with some solid earnings, maybe that could be the bottom.
Yeah, I could, and I really hope that that's the case. It's just that so far this earnings season, what we've seen is not very good. So I'm hoping that they come in with good numbers as well. But yeah, I mean, just from what we've seen so far, I'm not banking on it. The only positive earnings we've seen just about is Apple's, and that's because they're the best company in the market just about. So I don't know. It's gonna be a crazy next few months, Mike. And even if they don't report good earnings, hopefully they at least have a good outlook or something like that.
True. Alrighty, so it looks like we're trying to have a little bit of a bounce up. Like I'm looking at a couple different stocks, and some of them are holding up a lot better than others. So that's interesting. I mean, Neo is just getting destroyed. It's actually on the bottom of my watch list. It's down 7.5%. That one's looking rough. Run is looking bad. Beyond's looking bad. Enphase, Spotify, Tesla. Wow. All right.
Man,
Yeah.
Beyond
Crazy
even
stuff.
had that good news with that plant-based McDonald's burger last week, and was it on Monday? And they ended up doing pretty good. And man, it sucks to see them kind of falling off now too.
Yeah. Wow. Alrighty. So then we have Ravi saying thoughts on AMC calls for February expiration. I'm not a fan. The problem with this one is it's a hype play, right? And that's okay. But the problem is that with the whole AMC argument at this point, it's all about, I guess you can say, seeing the mega short squeeze. But like at this point, the stock went from $72 down to $13.80. So the hedge funds that are short this company now, they're in a great position. At this point, they could have just bought calls to hedge themselves. So they're literally like, the lower this stock goes, the less the probability is that we will see the mega short squeeze that everyone's hoping for. So at the same time, can AMC pop up over the next couple weeks? Absolutely. Anything's possible. But am I going to buy options on a stock that has a 158% implied volatility right now? And it's no, it's just the options it's not worth it. So it can pop up, but it's just not worth the risk. And it would be different if like we were looking at calls on like a play that that is undervalued, or the stock is doing very, very well fundamentally, but that's not the case for AMC. In the case is just a short squeeze, but every day that this stock goes lower and every day that just passes by, the hedge funds just get in a better and better position.
Yeah, and I feel really bad for a lot of traders with AMC. I'm sure I know that all that hype really got a lot of these traders to buy a lot of shares of AMC at the top. People have been trying to really get into these call options, and we can see AMC it's had what, one, two, three, four, five, like 6 green days out of the past like 20 trading days or something, like not very many. And looking at AMC now, it fell below that key $20 support. That was terrible. It fell below the $15 support, another big one that was not a good level to break through. And yeah, it's continuing lower today, down 5% again. I don't like it, Mike. I would never play this one anymore personally. I thought maybe, while AMC was going crazy, you might have been able to get into like some quick in and out day trades or something. But, honestly, I'm not a fan of this one. I've seen so many people lose on this, even to the upwards of like hundreds of thousands of dollars. So I really hope that traders are staying away from this one. And honestly, I know that it's going lower, and people might argue, Mike, well, hey, AMC's going lower. And for example, like we're seeing stocks like Draftkings go really low too. And some people might draw the comparison. Well, hey, AMC's been going down with these growth stocks, so I'm going to hop in AMC so it goes up with these growth companies. But just realize, AMC was in a very strange situation. That's the only reason that they really rose like that. If they wouldn't have had that short squeeze, we might not have even seen a big rise out of them at all. So I don't know. It's a weird situation, Mike, and I don't see it as being a growth stock in my opinion.
Yeah, me either. So it can pop up. It's not really worth the risk to us. But thank you for asking that question. And then let's see. Then we have we have Mike saying thoughts on opening a small position in Matterport or wait till what happens after earnings. So I like Matterport. Is it my favorite play in the world? No, but I do like them. They have growth potential. Their fundamentals look mixed. Like there's mixed readings with the fundamentals, but at the end of the day, if you want exposure to Matterport, it would be much better to buy them around $7.60 rather than the average price we've been seeing over like the past, what is that, couple hundred trading days, around 15 or like 17. So a small position wouldn't be bad in my opinion. And worst case scenario, like even if it is just a small position and it does fall more, then you can enter like your full intended size and that will lower your average.
Yeah, that's very true. That will actually be a good way to go. If you kind of shorted some puts, maybe then averaged in if it kept going down. I think that'd be a pretty good way to play Matterport. And this is another one, Mike. Like whenever you look at a stock like Matterport, you're like, man, like, is this thing ever going to slow down? Like, I just cannot believe how much like a falling knife or just how much downwards momentum we've been seeing out of some of these stocks. Like, I know that sometimes, we've seen sell-offs in the past, but generally they're not just this straight down. Like Matterport's been a stock, Mike. Like it seems like almost every day I look at this stock, it's down like 10%. It's kind of been insane actually the past couple of weeks to witness Matterport's kind of demise. But lots of volume is coming in though on this drop. So I'm hoping that there is some players getting in for the long term, and I'm sure that there is. And like you said, Mike, shorting puts is going to be a really good way to go with Matterport. And not just them, but I feel like there's a lot of metaverse type of plays out there. Like Unity is another one I've been eyeing up. They've also been on a huge downtrend, just like Matterport, and they were also getting that metaverse hype.
Interesting. And then one other option, Mike, is if you want to, you can head over to Matterport's options chain, and because implied volatility is so high and the stock is relatively low, Tom, Matterport, I just want to showcase this chart really quickly, is like if you headed over to their options chain, if you want to, you can sell like the 5-strike put for March, and you can get paid around $40 for that, and it'll only cost around, I guess you can say like $460 to do that position, but literally you would only buy shares at $5 each, only if it was below $5 on March 18th, and you get paid like $40 for doing so. So that's one potential play. The downside is that it requires like $460 in order to do it, but it's like you're getting paid to potentially buy the stock at $5. So that can be a win. Or even if you want to get a little bit more aggressive, you can short like the $7.50 strike put, and you can get paid around $150 today, and you would have to buy the stock at $7.50 if it's below that on March 18th. So you get more, you get paid more, but also more will be required in margin. And even if you wanted to go out further, like let's say you went out to like July's expiration for the 5 strike, you can get paid like $80 for selling the 5 strike put for July. So consider looking at short puts. For this one, the margins are relatively low compared to other stocks, which is a good thing.
Yeah, they are. And honestly, looking at Matterport, I really like it for the long term. And shorting those puts for March, I think, are a really good option, Mike. What do you say it was? $40 premium there?
Yeah, $40 premium for the 5 strike. So it's like it's pretty far out of the money. You're getting paid like $40 to potentially buy the stock at 5.
Yeah, and like whenever you told me that the July strike was $80, I was kind of surprised it wasn't more compared to the March. So I think
Yeah.
that makes the March a lot more enticing to get, and obviously then you wouldn't have to have your capital tied up for quite as long. So I think that's a really good way to go, Mike. And actually, you'll be playing it through that earnings as well. So it could get a little bit crazy, but in the end, though, hopefully it goes pretty good, and you could end up getting some shares of a pretty good company down here. And I don't think it's just Matterport that has some good opportunities. Like there's been a lot of stocks down at lows like this, Mike. Like look at Roblox even. Like I feel like they're going to be a good one too. Like their IV is actually popping up in a huge way also.
True that. Wow. Yeah, Roblox is another good one too. And then I know the Pelosi's took a pretty bullish bet on this one, so I don't know.
Yeah.
We'll see. I mean, IV sky high, so it's not bad for short puts. The premiums are pretty insane right now. So yes, we will see. But checking back in on the market overall, we're still seeing a lot of mixed movement. Like the market itself is not tanking down, but specific stocks are. For example, like we have Neo just trading lower by the minute. Sunrun's getting destroyed, Enphase. So it's like it's interesting in the sense that the market itself is like kind of trying to hold up, but we know there's a ton of volatility.
Yeah, I guess some of these bigger stocks like Apple might be holding up the market. There's not too many stocks in the green though, so I'm a little confused how it's staying up as good as it is. I could actually see the market selling off later today, Mike. Like personally, if we fall below this 426 support, I'll definitely be eyeing it up for some puts or something to the downside. I might not get some puts that expire this week, of course. Obviously, it's already Friday. That'd be a little crazy, but I know some people do that. But maybe like some next Friday expirations for like a quick in and out day trade might be good if we end up breaking below some of these supports. But it's going to be tough. Like it's hard for me to do that stuff on a day like today and even yesterday, like with all these big events going on, Mike. Like we just have so many things going on from Ukraine to Powell to rates rising to China news. Like I just can't believe everything that's came out this week, and the SPY has just been up and down constantly. Like I feel like intraday the SPY can go either way. So it's a little hard to play this week, I will say. But if we end up breaking below this key support, I'll definitely be eyeing it up to the downside. And like as far as tech goes, Mike, like I know the QQQ is selling off a little bit more here, and I honestly feel like the QQQ could fall a little bit more than even the SPY.
Hopefully it holds up. All right. And we have Hunter coming in saying, if people listen to me instead of calling me a hedgie and that I don't know what I'm talking about, they would have saved lots of money. Yeah, I know you were making some good comments when the AMC craze was happening. So I'm sure you definitely did save people some money. So that's a good thing. But yeah, for sure. And then we have Iranical saying, guys, did you notice SARK? It's going crazy. Let's take a look. So this is the fund that inverse is everything that Kathy Wood does or that shorts it. So yeah, considering like all of her major plays are getting destroyed, it's doing very well.
Yeah, it's doing great actually. I can't believe it's up this much, and hey, it's on fire. I'm glad that it's doing well. Obviously, Kathy's been doing terrible. ARKK is down a lot, almost down to $60 here. ARKK is looking like Zoom or something on the chart, Mike. Like, man, it's looking terrible. But yeah, she got into a lot of those companies at the wrong time, and like Hunter and everyone's been saying, they definitely should have been adjusting their portfolio a little bit better, and their timing was obviously off by a little bit. Now I will say though, over the past 5 years, Kathy's done very good, and honestly, even with the way ARKK is falling, she's still doing pretty good. But I would say though, like if it turns around, she'll obviously be a lot happier. But Mike, I mean, at this point, like it's getting pretty brutal here. Like I'm not sure, even if we do see turnarounds out of some of these stocks, like I'm not sure ARKK is gonna fly up above all-time highs again anytime soon.
Oh no, it's gonna take some time, because she did buy she bought a lot of great companies, but the problem is that the price at which she bought them, like a lot of her holdings are great companies that have a ton of potential, but it's like when you pay, when you buy the companies when they're trading at a price to sales ratio of 100 or more, there's a problem there. So we'll see. I mean, I'm very curious to see how this ends up working out, but yeah, it's looking pretty tough in the short term, and SARK is just exploding up. So we'll see. And then Hunter said, Christ, I'll be a lot happier if she turns it around. She's got Draftkings in that bad boy. Yeah, Draftkings, Zoom, Teladoc, of course, Tesla. So she has a lot
Personally,
of good
I don't even care about any of them besides DraftKings.
Gosh. Not Zoom, Tom?
No, I like them, but they're not my favorite.
Gotcha. Yeah, I mean, she has a lot of great companies, just the price at which she paid. So we will see.
At least Zoom has some good fundamentals, at least.
Yeah, exactly. Like Zoom is in a pretty good fundamental position, like especially compared to some of these other growth companies, like even my baby DraftKings. But like Zoom's still printing money even with the world reopening. So, I'm very curious. Like, how much longer can Zoom go just getting destroyed week after week before people realize that they're still doing very well fundamentally? The good news, and I'm sure that you saw, Tom, but I've been seeing some pretty good flow going with Zoom call options lately. I know Hunter pointed a couple out to me as well, but just like I played the setup back in, I want to say May, and there was a huge run-up afterwards, it's a very similar setup to what we're seeing now. So, we're seeing some of the smart money flow back in. I feel like the downtrend is decelerating slightly, but then again, they have earnings soon, so that can be, I guess you can say, a reversal.
I'll actually never forget that May entry, Mike. Like you got in on like May 11th or May 12th, like right down there on the bottom, and I'll never forget it because that was actually like Palantir Day. I don't know if you remember that, but Palantir they announced a contract or something that day, and they exploded. And ever since that Palantir Day, growth stocks just started going on a huge uptrend right there. And that was such a good entry. I'll never forget that play on Zoom, Mike. That was just perfect down there at the bottom. And actually, like on May 11th, everything went up. Like just about every growth stock on May 11th had a humongous green candle. So it was very interesting to see all those stocks moving like at the same time like that. And I'm really happy to see that Zoom was caught right there. And as far as Zoom now, we're not catching it on a green candle like that, but I really think it's a good bottom.
Yeah, hopefully. All right, with the next comment, we have, we have Trading saying, SYK on the downside, thoughts? So I don't really follow this company too much. I'm just going to take a quick look at some of their fundamentals. So, like, the revenue's been pretty consistent and pretty good, positive free cash flow. Revenue's constantly growing for the most part. I just don't really follow this company too much. Tom, can you give us, like, some technical levels?
Yes, on a technical basis, it looks like there's a huge support right around $240, give or take like $2 here. It looks like there's also some support around like 238, but I would say there's a huge support like right around where the stock's price is right now. And if we fall below that, there's another support down here around like 230, and then below 230, I'm seeing another one down at 220. Those are going to be the main levels I'm looking at as this stock starts to fall. If it does start to bounce off of 240 back to the upside, in the short term, I'll definitely be eyeing up another resistance around $250. After that, I'll eye up like 260. But yeah, it seems like, honestly, it seems like it's going down right now, and they just had earnings too. So be a little careful with this one.
Yep. Alrighty. And then let's see, with the next comment, we have Trading also saying that he likes the dog ETF. I haven't been following this one, Tom. It looks like it's short the Dow. So I know, of course, we have like UVXY and like SPXS and things like that. But Yeah, I mean, it seems like just like one of those plays. I don't think it's leveraged in any specific way, but either way, it's been doing pretty well with the recent downturn, But over the long term, it kind of looks like the chart of like VXX or like even like SPXS.
Yeah, it kind of reminds me of like SPXS. And, looking at it, I could see it maybe going up over the next couple days. Like, obviously, it goes up like when the market goes down, but just be careful with these. I think that they're good for short term plays, like you mentioned, but obviously, I don't think I'd buy shares of this one and swing into the upside or anything. It looks like it does decay, just like one of those stocks, like you mentioned, Mike. So definitely be careful with it, guys. There is a lot of volume coming in, though, so I could see it going up for a few days, but just don't expect it to go up for the long term or anything.
All right. And then let's see. With the next comment, we have Jesse saying Hood going up some. Let's take a look at Hood, Tom. Robinhood. Yeah, Robinhood's, wow, it actually recovered a lot better than I thought. It's only down 5% now, which is actually really good to see. And even though their earnings outlook wasn't the best, like the stock's not doing too bad.
It's not. We actually erased a lot of that loss from yesterday. We got all the way back up to that 1150 resistance that I actually mentioned at the beginning of the live stream. And I'm pretty surprised to see that we got all the way back up there, especially with how a lot of other stocks are moving down again today. So I'm happy to see that Hood got this nice move, and I'll definitely be eyeing them for a nice breakout to the upside. I think it definitely looks interesting, but sorry, someone just posted something in the Discord and it just totally caught me off guard just now. I had to delete it. Some of these people post some crazy stuff, but yeah, looking at Robinhood, it just got a huge momentum boost this morning. And Mike, I'm wondering if we'll be able to get back up above this $11.50 resistance. Like, I'm pretty curious. I can't believe it's filled the gap back up like this.
Interesting. Yeah, I mean, it's almost back to yesterday's level, so we'll see. And then we have, we have Vicky saying, guys, are you forgetting that ARK's timeline is 5 years? Also, Kathy has been doing this for 40 years, so I'd give her time for her plays to work. She didn't invest in innovative companies by accident. She clearly knew the risks and took them with lots of analysis. She's holding a lot of great companies. I'm holding a lot of companies in the ARK ETF. Draftkings, Zoom, I have some exposure to Teladoc and other companies like that. The problem is not that she's investing in innovative companies, it's the price at which she paid. For example, like Hunter has all of the numbers, and I respect Kathy, but the problem is like when you're managing billions of dollars and you're investing into companies that have a price to sales ratio of over 100, like it's hard to justify that valuation. Like I said, I'm holding many of the companies that are in ARK's funds. Like I'm looking at some of her holdings right now. Zoom, Teladoc, what else? Spotify, love them. Square, love it. Palantir, DraftKings. I was looking at Robinhood, things like that. Like she's holding a lot of companies, Roblox, but it's just the price at which she paid. I mean, Hunter has all the data, and I'm sure a lot of the companies she's holding will do well, but in a market where rates are rising, it really hurts the present valuation of a lot of growth companies, and we're clearly seeing that even out of some of my favorite holdings like Zoom, DraftKings, and even I guess you can say Square.
Yeah, and the whole point of what Mike's really saying, Vicky, is that whenever you're looking at these stocks like Zoom, for example, we're not saying that Kathy's a bad trader or that she's awful or anything like that. We're just simply saying that she kind of messed up a little bit. And, you almost can't argue it. She got in at such high valuations. Like, what was Zoom going to do? Go up to $2,000 a share? Like, it's kind of crazy to actually look at some of the valuations of some of these companies that some of these companies were at. And the main thing is that, she did mess up. If you can't sit there and truly tell yourself that she messed up, then you're just a little bit biased to the upside, which that's fine. Stocks generally go up in the longer term, but we just have to understand that as traders, we can learn from Kathy. You know what I mean? Like she was buying at wrong times, and a lot of people were buying at wrong times too. Like Mike, I'm sure you got burned, but I got burned on Zoom a little bit. I got burned on DraftKings. I'm sure a lot of traders have gotten burned over the past year on some of these growth stocks, and we can learn from that. And I just think it's really important to talk about it. And I know it might make some people upset that we're talking negatively about Kathy, but it's a really good learning situation, to be honest.
Exactly. I mean, you guys hit it right on the head. And then even Hunter had some information saying she's bought great companies at horrible prices. I've done that in the past too, right? For me, Draftkings, I bought it too early. Zoom, bought it too early. Square, bought it too early. But over the long term, it should be fine. But when you're paying like crazy valuations, there's a problem. So I'll read what Hunter has to say. Hunter said she's bought great companies at horrible prices. She's years into some of these holdings too and is down over 50% on many of them. And she's going to need 100% gains on them by 2025 to break even. And that's after she averaged down with tens of millions. The only way to justify when she purchased Zoom, for example, the first time was if she wasn't having a 5-year outlook and was swinging it. So again, recap, I'm holding a lot of the companies that Kathy is in. The problem is not the companies, it's the valuations. But either way, thank you so much for the comments, Vicky. We like these comments. It leads to a lot of great discussions. So shout out, Vicky. Thanks for these great comments. And hopefully these stocks pop up that are in the ARK fund. Because like I said, I have a lot of exposure to them.
Yeah, me too. So I'm really hoping that they end up moving back to the upside. And a lot of these companies are at good prices right now. So while Kathy's averaged into a lot of these up here, you could be getting in for some pretty cheap prices down here. If you're looking for some shares for the longer term, it could end up being pretty good. So I'll definitely be eyeing them up, Mike, and hopefully we see them start to rise. Like Hunter said earlier, if Kathy does good, we'll do good. So I really hope that a lot of her funds end up going back up. And I'm not trying to trash talk her or anything like that, but I'm really hoping that her stocks end up rising. And there's a lot of funds that have been going down too. It's not just Kathy. Like just about any fund that's been in that's exposed to a lot of growth companies has also been on the dip too.
Yeah, and like even some of the value plays are looking tough too. Like let's say we even cut out growth and we just looked at other areas of the market. It's like there's a lot of stocks tanking down, whether you're a growth play or even like a solid company like 3M, or even Boeing. Exactly, Tom. Like even Boeing is struggling. So crazy stuff.
Yeah, and 3M's considered to be like a pretty safe, slow-moving dividend stock, and it's just continuing to sell off here. And I know that they're a pretty slow mover, but it just sucks to see, like you said, a lot of these stocks down. It's not just Triple M either. Like I know some of these stocks like Walmart and KO and stocks like that are even starting to dip down over the past week or so. I know KO has been running this year, but it's starting to come down now. And whenever I'm starting to look at some of these stocks like Walmart, Mike, like I just can't believe how much they've fallen. Same thing with Amazon. Like look at how big Amazon's been dipping actually. Like Amazon almost looks like a growth stock on the chart.
Yeah, it's crazy. And then we have Vicky saying, I understand the point, guys. However, these companies will have explosive earnings and valuations won't matter then. You're looking from a standard valuation perspective. I get it. No hard feelings, just a discussion. And then Hunter said, valuation will always matter in the long term. For example, look at what happened to them in the past year. Zoom from $118 or 118 price of sales to a 10 price of sales. So I know what you mean. So like for example, like let's say a company, it's hard to give this example on the spot, but Hunter's perfect with this stuff. So for example, Hunter said she basically paid $110,000 for a company with $1,000 in revenue, not profit, with a 5-year outlook. So like the point is that if you're paying, let's say you're buying a stock, let's say you're buying Zoom at $500, right? And it has a price of sales of 100. Even if the revenue doubles, right? The price of sales will only go to 50. Like over the long term, you can't have stocks with the price of sales of 100 at like consistently. You know what I mean? Like over the long term, the price of sales will average out, and even if the revenue explodes, like that, like it keeps the stock price like at the same level it's at right now. So I definitely know what both of you are saying. I think we should just do a video on this actually. Like this would make a pretty good video on the main channel, how some of these companies like valuations can be I don't want to say skewed, but how they can just like different ratios and stuff like that. So great discussion.
I do kind of see though like where Vicky's coming from though, Mike. Like whenever she talks about like that, like as the stock starts to fly up, like the valuations don't matter. Like I guess like what she's saying is like in the beginning, like with Zoom, for example, like as it was flying from 260 up to 588, like obviously it wasn't caring about too much of those fundamentals while it was in that growth stage.
Right.
So I guess that's what she's saying, but I kind of see, I see where both sides are coming from here. And I honestly respect both of them, but I do see what she's saying though, because like if the valuation mattered so much, then Zoom would have never popped like that. You know what I mean? So,
but Tom,
but I guess if the hype comes in, and the hype's there, and the stock goes up, then I get what she's saying. But I also get the point of that when the stock's high, then you need to expect it to come down too.
So I'm very bullish on Zoom. I love Zoom at the current level. And I think back in September and October of 2020, when it was at $500 or $600 a share, it was just overvalued, right? And the problem is that, like, over the long term, companies will, I guess you can say, shift towards their real intrinsic value. So, like, I think it was overhyped at this point in time. And to say, like, valuations, like, don't matter, it's like, it's just, like, over the long term, like, the stock eventually will converge and, like, meet its true valuation. You know what I mean? Or, like, do you have any points with that? Do you disagree?
No, I definitely see what you're saying. I'm just saying that, like, within those few, like for example, like for those few months that Zoom was rising there, I get what you're saying, that it's going to come back down to valuation. But while it's rising for like those, like for example, how Zoom was rising for that 1 year, I think that during that time, obviously the valuation wasn't making too big of a difference. Traders weren't looking at that. It was traded mostly off of hype at that time, and it just had a ton of volume coming in and volatility. Now, I agree, though, more with you, where I would be looking more at the valuation and saying, hey, this stock's at $500, $600. It's overvalued. I'm not going to buy it. But I'm talking more of like when the stock was at 250 and then flew up to 500 like a few months later. Like whenever it was at 250 is what I'm talking about, where people would, you know what I mean? It just had all the hype at the time it was running. For example, Kathy's taking positions, and, it's making buyers come in. Now, I'm not saying that that's going to be a bad thing. Obviously it creates a lot of hype in the short term. But the main thing I'm trying to say, though, Mike, is that the valuation really matters. Like you said, for the long term, it's just that whenever these stocks go in these runs like Zoom had, it's hard to look at the valuation whenever it's continuing to run up like that. Now, as far as long-term investments, I would never buy a overvalued stock like Zoom up here at the top like this, but I'm just pointing it out because I see like what she's trying to say, I think, with some of the crazy movement that some of these stocks have had. And, it's good to see like what traders are looking at too, because at the same time, like, someone like me or you, Mike, who's like been looking at these for a long time, obviously it's easier for us to look at Zoom and say, well, it's overvalued up here. But, for some of these people who maybe aren't into fundamentals as much, it's good to at least talk about it.
Yeah. I just feel like anyone who, like, especially when a stock's moving the way Zoom was, I feel like if you aren't looking at the valuation, like, you're going to get burned. Like, it's inevitable. Like, for example, we all knew that Zoom would do very well with the world shutting down, and Zoom is still doing very well. But the problem is, like, you can buy a great company at a bad price and still lose. For example, like, you can buy... We all know Apple's going to do very well over the next 5, 10, 20 years, but it's like if you pay too much for it, the problem is that you can still lose. And I have a perfect example of this. Let's say we look at Intel over like the max weekly chart. Like Intel max weekly chart, I want to say in 2000, let me see, in 2000, yeah, exactly, in 2000, their high was $75 a share. They have not got to that point ever. They've never retested that ever. Yet their revenue and their earnings are better now than they were back in 2000. Intel, over the past 20 years, has been in an industry that has been growing quicker than almost anything else. They're a pretty solid company. They are reporting great fundamentals, but their stock did not recover to the levels they were at back in 2000. So it's like, that's a perfect example of getting in a great company at a bad price, and even though you were right about the company, you were wrong about the valuation.
Yeah, that's a really good point, Mike. I really am glad you pointed this one out. That's a really good example. And another good one is even like Nokia, like a few of these stocks like Intel, Nokia, I believe even like IBM. Yeah, even like IBM over the past like few years. It's all it's been like that for a long time. And I'm glad you pointed that out with Intel. It makes a lot of sense actually. And that does actually make me worried about Zoom, like that'd be crazy if like Zoom never came back, and they might not, like it's crazy. And how long has this been, Mike? This was the early 2000s. What's it been, 20 years, and it still hasn't came back to that valuation up there? Like that's
Yeah.
kind of crazy actually.
It's been 20 years and their revenue is better than ever, and a lot of other factors are too. But I guess that's just like a major learning lesson for us and everyone else in the stream that you can buy great companies. You can be right about the revenue. You can be correct in your assumptions about the company. But if you pay too much for them, if you pay too high of a valuation for their shares, you can still lose. And Tom, this is over a 20-year time frame. 20 years. 20
Yeah,
years.
that's actually pretty crazy to like look at the chart on Intel and see that for 20 years now. I've seen the Intel chart a lot, so I already knew, but yeah, I mean, it's pretty crazy to see how it moved like that in the early 2000s. And honestly, it wasn't just Intel. There's a lot of other companies that look just like this. I know I pointed out Nokia as one of them, but there's a lot more too. And it's kind of crazy to see how those valuations were in the early 2000s, Mike. Like we talked about in the beginning of the stream with that dot-com bubble and everything, it definitely created a big like a big movement in the market as far as like moves to the downside. Like a lot of those stocks had to come back to their right valuations probably. Like I don't know the exact numbers, Mike, but I'd be very interested. Now I might go back and research today and try to find like how Intel's valuation was looking in 1997 compared to 2000 and then compared to like 2002, because it'll definitely be interesting to compare those numbers to maybe some of these growth stocks today.
Absolutely. So I just want to give a huge shout out to Vicky, Hunter, and basically everyone else who was in the comments today. I would say today's stream was pretty awesome. We had a lot of great conversation. So huge shout out Vicky, huge shout out Hunter, and everyone else who had some input in this conversation. We had a great time today. So Vicky said Intel didn't innovate and they're late and won't survive. I mean, I guess you can argue that, but even if you look at, like, let's say like we looked at like from 2000, let's say we looked at like from 2000s to like 2015, like Tom, like correct me if I'm wrong because you're more with the hardware than me, but like Intel was in like all of the Apple computers and a lot of those devices too, and like I felt like besides like the past 5 years, Intel has innovated relatively well. Like I know AMD and Nvidia are like the kings now, but like forget the past 5 years, I feel like they've been innovating relatively well.
Yeah, and that's the main thing, Mike, is that AMD and Nvidia have been so good that it makes Intel look bad. Because see, Intel, they make computer processors. Now AMD, they make computer processors and graphical processors. So they make two different processors there, and they're also two largely used devices, you could say. So like almost every computer nowadays has a graphical processing unit, which is a GPU, and then CPUs. Now Intel only makes CPUs, and they're also going to be getting into GPUs. But I will say though, Intel's CPUs are pretty good. I know AMD over the past 5 years have been great, but like honestly, like one thing I wanted to point out with Intel, Mike, is I know that they haven't innovated too much, but their processor speed is pretty good. So those are good. But one thing is, Mike, is look at how quickly Intel fell after 2000. Like how we talked about with how some of these valuations like right now are crazy, and we're seeing stocks like Zoom fall down, 70% in the past 6 months. It really actually reminds me of a setup like Intel. And one thing to keep in mind is that if you would have just waited 6 months from these all-time highs and you would have bought Intel down here around $20, that would have been a great long-term pickup there. Intel held $20 for a long time, ended up doing pretty good. So I guess, Mike, it's kind of like what you said. If you would have been buying at a high valuation, it would have been bad. But if you would have waited to see that valuation come down to a nice level, you could have picked it up at a good price and made a pretty good gain on it.
Absolutely. Hunter said Spotify isn't innovating either. And then Trading said, thanks, guys. Intel is huge and building a new plant in Ohio. So, yeah, that's good news. Intel is a good company and they have power to push numbers. So, yeah, lots of great input. I'm actually curious on Spotify, Tom. I wanna like do a full fundamental analysis on them. Like, I know they're trying to push to, like, I know they had that deal with Joe Rogan, and that really boosted their stock price in like 2020. It hit highs of 387, and now it's at 167. So, maybe it's in that room or in that level for a potential dip buy. I want to take a look at some of their fundamentals to analyze it, but like Hunter said, like, they're not really innovating, like they're not changing the world, and that's not necessarily a horrible thing. Like, most companies, if we're being honest, don't change the world. It's like the very, very small percentage of companies that actually end up changing the world. But I want to take a look at Spotify later on like a fundamental basis to see how their valuation is looking, because I know they've been growing a lot, but can they sustain the growth that they've been having, and how do they plan to continue to grow in the future? And then another thing is they do have some pretty fierce competition from like Apple Music.
Yeah, that's actually a big deal. Like they have a lot of competition. Like you have Spotify, you have Apple Music, you have more than that even. There's even YouTube Music now, and there's I'm sure Google. Well, that's YouTube Music is Google's, but I know that there's a lot more out there besides just Spotify too, as far as like streaming services. Like I remember, Mike, whenever Pandora was really big back, like when the iPhone first came out.
Oh yeah.
Yeah, so there's always like new stuff like that coming, and honestly, like Spotify, I like it, Mike. I think it's a pretty good company. I like the chart setup here. Obviously, it's breaking below some pretty key supports. I would be really curious to see how these next earnings are going to go too. We have earnings coming up on February 2nd. So like you said, if we look at some fundamentals here, whenever we start to see what happens on February 2nd, it might give us a pretty good insight into how they might do over the next few months. So I really hope they end up doing better. And I like Spotify, and it's also one of those companies that were overvalued, and it's also now just coming down, and we're seeing it looks just like a Zoom, just like a Corsair, just like a Draftkings. It's just thrown into that growth sector here.
Yeah, so I just looked at some data from 2020, and it looks like the global paid subscribers for Spotify is around like 125 million. They are the leader, but in second place we have Apple Music at like 50 million or so. Or I guess you could say like 50, I guess you could say 60 million global paid subscribers. After Apple Music, we have Amazon Music right around like 55 million, Tencent Music right around like 40 million.
Amazon's that close to Apple?
Yeah, Amazon's really close to Apple. So that's interesting. But I'm also curious how Amazon considers their global paid subscriber, because correct me if I'm wrong, because isn't it like when you get Amazon Prime, don't you also get Amazon Music?
Yeah, I believe you do. You might I can't remember the exact stuff, but you might even get Amazon Prime Video included in that too.
I think you do. So like I'm curious, like, is this little like data thing, is this including just like all Amazon Prime subscribers? I don't know. But like, how are they classifying this data? Because like I said, Apple Music's right around like 50, and what did I say, like 60 million subscribers, and then Amazon is right around 55 or so. So it's like, it's neck and neck, but like, maybe I'm just biased, but I feel like Apple Music is much more popular than Amazon Music.
Yeah, me too. I've never seen anyone use Amazon Music before, so that's what would really make me think, Mike, it might have something to do with the Amazon Prime stuff, but who knows? I mean, we'll have to see. I'm honestly going to look into that now, and I'm going to go ask some people if, like, what they listen to music on. People are going to think I'm crazy when I ask them if they use Amazon Music, probably.
Yeah. So yeah, all right, Tom. Well, do you have any last minute things before we wrap up the stream?
I just thought today was just a really good live stream, Mike. Like you mentioned before, I love getting into some of these conversations, and sometimes it sounds like, I know some of these conversations might sound a little bit hostile, or a little bit you know what I mean, like you're having a good in-depth conversation, but it's always good to have conversations like that. Everyone's not always going to agree on everything, and that's a good thing. If everybody thought the same way, then it'd be too easy. So I'm really happy that we had some of these good conversations today. I know I learned some stuff about fundamentals, which was great. And, we looked at a lot of great companies, and I just think it was a really good live stream. And, the SPY's holding up today. As long as we hold this support, it might end up being a pretty good day after all.
Here we go. So Vicky said, I don't think you get music on Prime. So yeah, I'm not sure. I'm really not sure. We'll have to look into that. But I was just curious how they were classifying their data. But just one more last question. We have Michael saying, hey guys, good morning. What is your opinion on Penn versus DraftKings? Do you see them both succeeding short-term and or long-term? I'm currently getting bundled on both stocks. So DraftKings is definitely my favorite. In my opinion, they are much more innovative. They have a much larger market share in terms of like the online gambling space compared to Penn. Penn has potential. I want to do a full fundamental analysis on Penn at these current levels. I like them, but just not as much as DraftKings. Penn's at $40, Tom. That's crazy. So like it might be a buy the dip type play. DraftKings is my favorite though by far. Again though, Penn is more established. DraftKings is they're still in a key growth phase, so they still have a long way to go. But I feel like over the long term, they have more growth potential, especially at this level. So, I don't know if you have any input there, Tom, but if not, we're going to wrap up the stream.
Yeah, I really like Penn too. I will say they have some pretty big players in there. I know that in the sports betting sector, there's Dave Portnoy owns a ton of shares of this, and he's that guy who does the pizza reviews for Barstool Sports, and I know he's a pretty big figure. So definitely look at Penn. I think it's a good option to buy, especially if you're getting into some of these gambling stocks. But yeah, I like it for the long term too.
Sounds great. Well, thank you guys so much for joining. This was like one of the, in my opinion, one of the best streams we've had in a long time. So thank you so much to everyone who joined and participated. We really appreciate all of you. Hopefully the market rockets up so we could end the week on a great note. But besides that, thank you guys so much for watching and have an amazing weekend.